Today is March 30, 3 p.m. We saw some unusual options on AMD, so we wanted everybody to know. As you can see here, AMD had crossed the 100 level. This is the red price level here. It signifies the 100 level, and it's a psychological level. So at this day here on March 23, it did break it, but then it fell right back down. And now we are again approaching it. So what is going to happen here? So that's the context of it. And if you were to zoom out even more on a 3-year period, you'll notice that this 100 range price level here, right here, it's also acted as a resistance level here. This acted as a support level here. And here's another resistance. So throughout the years, all the way to 2020 and 2021 and 2022, this 100 price level has been a very important level. So with that in mind, we look at the unusual options today. And first off, we notice that it is at 13%. The volatility is quite low. And so when we look at this options tape, we see that there is this very number one, very large amount of puts at the 95 strike. That's in July though. And then we see this at 147 here, we see these 4,905 contracts for the 94 strike puts, right? And what is this? This is, to us, looks like a calendar spread. And also at 159, you see this as well. At the 95 strike prices, the puts, this is also a calendar spread where they sell the near short-term 95 strikes and then buy the longer-term 95 put strikes. So you'll see that also here, same trade as well. This one's 3,000 contracts. And so down below here as well. So on the options chain, you could see that here on April 6th, just 7 days away, the 95 strikes are here, very high volume here. We also have the same position as well. And then you buy the April 14th, also 95 strikes. So it seems like there's these unusual options on this 95 strike. Also the 94, we also saw that, but more on the 95 strikes. But it's the same strategy, a calendar spread. And so what the calendar spread does, if we analyze that, you could see here, this is the trade, and we're right now at 97. So it is a short, but it is targeting that at this price level, that 95 strike is the max profit. And so the calendar spread actually takes advantage of the volatility because it's a positive Vega spread. So the thinking is that when the price level drops, the volatility will increase. So it is beneficial. It is a positive theta, so that's also quite good. A negative delta trade, since we want the price to go down just to 95, right? However, we don't want it to cross this 91 level. So they're not too bearish on this trade. It's only 7 days away, and it only right now it only costs $1.11, which is $111. So not too much buying power per contract if you want to put this trade on. And so again, this is the trade. Here it is on the daily, and here we are here. So at 95, it's about right here, which makes sense because if you look at the past few days, this 95 level has acted also as a support here for these other recent trading days, right? So that's what's going on. And so there's these unusual options are telling us that it will not break this 100 psychological level and that it will be coming down, but not too far down. There is a break kind of here where it won't cross down below that 91 price level, right? So it will trade around that range, and as long as it trades around this range, it will be profitable. Okay, so if you found any value in this video, please give us a like, and it'll help us make more videos, and subscribe and hit the bell icon, and you'll be notified when we see these unusual options and report it to you. Thank you, and good luck trading.